So everything Phil just said, is that your expectation we're going to get some sort of halt or temporary freeze
I think
production?
we'll see a halt to production. When you think about the 737 MAX at 42 a month, you're carrying about $5 billion of extra inventory. Now, of course, you have to pay your supply chain, you have long-term agreements, so maybe Boeing will save half of that. But if you assume this goes on all of through Q4 clearly and into Q1, that's an extra 6 months, that's $10 billion in capital. You have a conservative CFO here who'd like to save that cash on the balance sheet.
And of course, it's not just a Boeing story. I mean, we talk a lot about the airlines that are impacted by this, but the supply chain, what it means for the aerospace sector. Spirit Aerosystems, BAE, United Technologies, ATI, Triumph Group, CFM, which is the GE Safran joint venture. I could keep going down the list. What are the ripple effects?
Sure. There's 1 million people employed across the supply chain, not only at Boeing, but across the aerospace supply chain. Spirit is the most levered with revenues to the 737 MAX. The management team has clearly recognized that, and they've diversified away with 2 deals in the last 18 months.
One of the things we haven't necessarily talked about as much, Boeing is still one of the biggest defense contractors on the planet, and we can talk about the impact that the grounding of the 737 MAX, the fact that this is a company that is essentially in crisis right now, is having on other potential commercial business, whether it's the 777X, right on down the line. But what kind of effect is it having on the defense side of the business, too? And I ask that because there's continued issues with the KC-46 tanker. Boeing over the weekend basically bowed out of bidding on the $85 billion ground-based strategic deterrent, which is going to replace the ICBM missiles that are currently in silos here in the U.S. How much, is there any way to quantify how much potential future other business Boeing is missing out on right now because it's so focused on the MAX?
So I think it's interesting because Boeing has its hands full on the defense side with 3 new program wins that they won in 2018, and it's currently working on executing those. And we know new development programs have a ton of risk associated with them. So it has its hands full and isn't focusing on deploying capital deployment to those businesses. What I think is interesting, bigger picture, stepping away, is the street, or at least we've cut our free cash flow estimates from 2019 to 2021 by $40 per share for Boeing. Now, what the concessions have done and what the accounting costs have done have added about $8 billion, as Phil said. If we double those to $16 billion, those are $26 of free cash flow per share. So the street is already overestimating, in our view, what the impact to the total stock price is by cutting estimates. So to answer your question in a very long-winded way, we've become more negative on defense on the services side of the business, as a natural inclination has been on the other side of the business.
What about the dividend, Sheila? If it is in fact cut in some way, what is your expectation in terms of the impact to the stock? I have no idea how it's viewed amongst the shareholder base. Perhaps you can tell me.
The dividend is sacred in defense, as we've seen with Lockheed's free dividend yield. Boeing deploys $4.2 billion. At the moment, they have the cash on hand to deploy towards a dividend, so I don't think the dividend will be touched with the December meeting today.
You don't?
For now, I don't think so.
What would it take?
I think it's the timeline on the 737 MAX, which no one's been able to answer, and that's where we've seen all the criticism.
But I guess would a slowdown or a halt, is that intended to protect the dividend? In other words, without either of those 2 things, would the dividend be at risk?
Yes, I think so. I think you have to halt production to keep the dividend. And also what Boeing's done is it's taken out 3 revolving credit facilities. It's taken out long-term debt throughout 2019. So it's created a stable balance sheet position to be able to continue to support that.
Is the thinking that a return to service happens under the MAX name? Or should we start to think about how they might market it in ways that are unrelated to how we know it currently?
I mean, I think you could see a MAX change, but again, it's the airline that's the customer and not the individual. So very few people often know what they're flying on the aircraft. I don't know what branding sort of change will be put on it.
We're talking about a halt or potential freeze in production for the 737 MAX right now, but up until this point, and I realize they've tapered it down a little bit in recent months, but Boeing has been cranking out these planes. They've basically been getting parked and they're sitting in places all around the country right now. The longer they sit, how much of a risk does it become that those planes become a greater cost when we do see return to service?
That's a really good point, Morgan, and I think that's why ultimately you'll see a halt to production come out today or tomorrow, is because you are stacking up these planes. You do have an inventory build, and the FAA is going to go through as these aircraft return to service and going through ensuring each of these planes are safe to fly, so you don't want to build up too much inventory.
Do we know what the deal was between Boeing and Southwest at this point, or is it still secret?
I think it's a secret. Nobody knows. But Southwest announced a profit-sharing agreement with its employee base. That's how they work. But if you look at the $3.6 billion in concessions and Southwest's backlog of about 250 aircraft, you could do the math that Southwest likely got around $600 million of concessions from Boeing.
Quickly, Sheila, where do you stand on the stock?
We have a buy rating longer term. We think the free cash flow 2022 is going to be intact, and people have become incrementally more negative on the earnings outlook, so we're positive.